Dear follower, thank you for all your support. Today I'm going to do a quick review on my NASDAQ analysis in the past few days and the importance of the coming days. As most of you know that I published this analysis on September 5th about how eventful can be this September. We had Jerome Powell's speech at Cato Institute when he mentioned uh, Fed is ready to take bigger steps to control the inflation if it is needed. Then we have the inflation rate data today, which was 8.3, higher than the expectation. And also, we had core inflation data as 6.3, which is the highest in 2022 and in the past decade. So, this shows the burden of how complicated the inflation situation could be and how much uh, Fed should do to control inflation. So there is a great chance that we see at least 75 point rate hike in the next FOMC meeting, which is September 21, 22, and also it increased the possibility of 100 points rate hike in that meeting. Then we are going to review like this post which was published September 9. This is a very symmetrical uh, pattern which describe the situation in Nasdaq very well. As you can see, I published this post a couple of days ago. I predicted that this joy will not last long. Yesterday actually was the last day of this, and if you're looking, we entered this zone, and then today we see a market more than 4% negative. As you can see, we made some prediction about these and we made some trade based on this analysis. We entered long position during this time. Now we have this huge gap today, and in the future slide, I will talk about what would be the best decision in the coming days. But before we go to the next few days, let's say that we predicted that during these four important days, we could experience 2 to 4% change on each of these days. If you are looking at market is so red today and it's like 4% negative. It was predicted before September trading months even started. So let's go see what we are dealing with in the next few days. Uh, if you are looking at this week, we are going to have the retail sales data coming out tomorrow, sorry, on September 15th, and then we are going to have job data at the same day and uh, Michigan consumer sentiment by Friday. As you can see, uh, this is Nasdaq chart. Uh, I published this analysis on September 11th uh, for to provide the information about the important news that we are going to have this week and how they will affect the market. So the most important things to come could be the quadruple witching, which is the day that happens four times in a year, the third Friday of the March, June, September, and December, when stocks, futures, options, index futures, and options are expire at the same day, and we call it quadruple witching. So this is a very important day, and it can cause a lot of volatility, especially in asset classes with high short interest rate. Um, this is very important to know. because uh, it creates a chart pattern that is very important. So if you are looking at this moment that we are talking to each other, market is 4.2% negative, which is very similar with the situation that we experienced on February 3rd, which market had minus 4.22% negativity. So if you are looking, we can distinguish a five wave pattern between December and March. And if you are looking at this particular time, we had four positive day in row. Then market opened with a huge gap and closed at 4.2% negative. This is exactly the same pattern we are experiencing here. Four positive day in row and then a huge gap, and market is at this moment minus 4.2%, which increase the possibility that we are going to experience this wave. But what is important is the next 5 day happened after this big candle. If you are looking, we had one positive, one negative, two positive, and then negative days ahead. So this is called whipsaw, when market prices can change without any change in fundamental, and it's just like pure based on the best guess. Usually people think that we are going to fill all the gaps, so they start to doing like uh, inverse trading, and this could be considered as uh, counter trend move. But if you are looking there, and if you are an option trader, this could be a very very tough time to trade like in the next 5 days, because in the next five trading days we are going to have lots of data out, like job data. We are going to have retail data, retail sales data. Also we are going to have quadruple wage, and it will be ended by the FOMC, which is very important. So as you can see, my prediction based on this similarity is we are going to reach the previous low in June, or even we can cross below that level. And in the long term, we may see much lower readings for NASDAQ 100. So, what is important to know is that recently a very similar pattern increased in market. So we market experiencing very choppy but very similar to the previous pattern. So this is, for example, Meta, which you can see the whipsaw pattern here between August 26th and today, which is very similar to the pattern between June 15th to July 14th. There is a good chance that we're experiencing something like what happened here. So we are waiting for pivoting to consider if you want to engage in a new trend or similar something like this or not. But first we need to see something pivoting like this. I provide this analysis because it's very important. In the next 5 days, if we experience sweeps in the option market, you can lose a lot of money, because uh, if it's one day positive, one day negative, we don't have any particular trend, you may lose a lot of money. So I provide this analysis to do some recap on the live analysis I did today for my patrons. I want to thank all the patrons and those who support this effort on Patreon. You can find the address for Patreon on this video. I provided the link, and also I would like to thank all of you for all the support you provided. Thank you so much.